Hello, welcome to Coinscrum's technical interview series. I'm your host, Nicholas Gregory from CommerceBlock. Today it's great to have Yocom-Piatt, the project lead from Decred. Welcome, Jake.
Hi there. Thanks for having me on, Nick.
Jake, some of the Coinscrum regular viewers won't know much about Decred, even though you predate a lot of the networks we've seen emerge over the last few years. Can you please give us like a TLDR, maybe some insight into the history of Decred? I think everyone likes a kind of an interesting story. I think the story of how Decred came around, the history of Taco Time, that'd be quite enjoyable to hear.
Sure. I'll start with just a brief summary of of what the project is about and my role in it is. So I'm Jake Yocom-Piatt. I'm the project lead for the Decred project, and I'm the CEO of a company called Company Zero that is one of the main contractors for the project. So we build out infrastructure for the project, and I'm sort of in charge of infrastructure building. And the Decred project is an attempt to iterate upon the insights of Bitcoin and do it in a way that evolves continuously over time. We've been fond of saying lately that Decred is money evolved, and what our goal is to take this notion of cryptocurrency as a way to move the peg forward from traditional fiat banking and credit systems, move that forward and do it in a way that's secure in the sense that people can't arbitrate, people can't attack the network by double spending coins. It's adaptable in the sense that features can be added and consensus can be changed on the fly, as opposed to, say Bitcoin, where everything's very, 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 very static. And then also so that it's sustainable. And in that context, I'm talking about funding the work of building out these networks, because it's not cheap to do this. And it's work that has to, be sustained over, years and years, as I'm sure Nicholas is aware, working with CommerceBlock. So what we ended up, our sort of legend is that back in 2013, we started working on a full node Bitcoin implementation from scratch called BTC Suite. And what we had done is that we saw Bitcoin Core. We really thought the technology was great. We tried to participate with them. We found them, kind of difficult to participate with. So we figured, hey, let's bring some diversity to this ecosystem and start up another full node implementation. We did that. We encountered what we would describe as governance problems. That is, that it was very much a central planning committee run project. Despite the people being obviously very intelligent, it was very much whether, we were outsiders, they were insiders, and that really didn't work out to our advantage. So we sort of ended up moving on from that. So we worked on that from say 2013 till 2016 really. And then, on the side, we started working with, someone who goes by the pseudonym of Taco Time, and Taco Time started working with us to push, hey, you should really look at this paper I wrote. And this paper is, it was called Memcoin 2. And so in this paper, there were a number of things described, but the big idea in the paper that really spoke to me was the hybridization of proof of work and proof of stake. That is, you have the proof of work component and the proof of stake component, and they both do separate things. But if you interleave them, in a sensible fashion, you can actually get something that's greater than individually proof of work and individually proof of stake. You get really good incentive alignment. It solves a lot of problems where, for example, the incentive alignment with proof of work is pretty weak because miners don't have to hold coins. They can just dump it all on the market, and then they still have their power in the consensus system. And then we blend that with proof of stake, which has strong incentive alignment, where you can't you need to hold the coins in order to have sovereignty in the network. So we blended those two things, and then Taco Time was one of the founding developers of Monero. So Taco Time had worked on Monero back in early 2014, and I had been working with Taco Time since basically late 2013, and then we decided to sort of embark on this Decred project together as of February 2014, and then it took about 2 years until February 2016 to launch the network. So we went live in February 2016, and we're old school Bitcoin devs, albeit not Bitcoin Core devs.
Great, Jake. Decred's got 1.6 release coming soon. Tell us about it.
For sure. So with Decred, what we're trying to be, the evolution of money. Decred is money evolved, and we do that by having, by knocking out three major things: security, adaptability and sustainability. We're secure because people can't arbitrarily double spend on our network. We're adaptable because our consensus rules can change over time. We evolve via hard forks. And then in terms of sustainability, we are a self-funded project. That is, that subsidies from our blockchain are used to fund the ongoing development and build out of that of the project. And the 1.6 release that we're talking about today is the largest. I think it's the largest single release of Decred that has occurred since its launch, and that's because there's so much packed into it that I even have to be brief about what I'm talking about in the context of 1.6. And so the three major things in this release are decentralization of the treasury, fully accessible privacy tools. We had some of them running before, but now they're fully accessible in the graphical wallet, and also full-on Lightning Network integration.
So tell us, how do you go about decentralizing a treasury? I mean, I'm sure a lot of the foundations from 2017 would like to know that.
Yeah, so it is very much a tricky problem. As much as people might hand wave it away and go, "Oh, just write a smart contract to do it," it's a lot harder than that. So the way this has worked for Decred historically is that we have a centralized corporate entity. That corporate entity pays contractors who bill it via invoices, and then that is similar to how most of these other foundations work, in the sense that the foundation, a foundation has all these assets from an ICO or something. It's like a Swiss foundation. It's effectively a cutout, so it's not an IPO, and then they distribute the funds as they see fit. In the context of Decred, what we're already doing is we're already distributing funds on the basis of what stakeholders vote for. So stakeholders vote on projects and various things that receive money, like marketing or development or research and all of that. But to really fully decentralize it, you need to give the control of those coins on chain to the stakeholders, and that is a very non-trivial thing to do. So there are other projects, like Dash has done this before, but they don't actually have a treasury. What they do is that every month there's a disbursement of subsidy, and then people vote on-chain about what to approve in terms of how it gets disbursed from that subsidy. They don't actually accumulate any subsidy. And then if you look at other projects might do a similar thing to what we do, is there's a centralized corporate entity. What no one has done is
legal entity anywhere called Decred Foundation. It's pure on-chain, locked up with smart contracts, or your multi-sig in your world. Is that the way to think of it?
Yeah, and what we're doing here, is instead of relying on a corporate entity and the goodwill of someone like myself or others to not go and piss the money away on something useless, is what we're doing is that we effectively created a minimally complex built-in smart contract for Decred. It's effectively a hardwired one. It's not like, I can create one of these and just put it on chain. We hardwired it in, we coded it, and so the way it works is that once a month there is an invoice, there's effectively a draw from the treasury that pays a whole bunch of contractors, and then that draw needs to be approved on chain by our stakeholders. So our stakeholders already vote on the validity of the prior block, which is like a way that they can that they can prevent shenanigans from miners, and then they already use those their on-chain voting to confirm consensus changes. So this adds another component, which is to add the treasury, so that when the treasury draw gets published, then people can flip a knob and go, I approve this, this spend or spends from this, from this particular key. And then what that does is that instead of there being, just a whole amalgamation of funds on chain, there's a special account that goes up with every block with the subsidy, and then it gets drawn down by these spends that occur episodically. So it's a big departure from how other projects do this, and it effectively uses our existing on-chain infrastructure for stakeholding.
So if someone wants to come and join the Decred project, essentially be employed by Decred, what would be the process?
The process for people joining the project is we always encourage people to show up and engage and participate before they really try to go, hey, pay me, because we've had all kinds of experiences with people, and considering that we're really an open source project, open source projects rely on free labor, essentially. We don't run quite the same way, but if you're going to show up and go, hey, I'm really amazing at X, whether it's like in marketing or research or development, we need to see something out of you to be like, oh, wow, you really are that good at this. We want to pay you, and so we offer two kinds of opportunities. One is that someone has an existing proposal that's approved, and then they bring you in and they pay you through that proposal to work on something that's already been approved. That's we would refer to as we have a Decred contractor clearance. We're trying to borrow the smart concepts from nation states. So it's almost like you've got a security clearance to work on Decred, except it's more like, okay, your work is good. People vouch for your work. You're not a total doofus. Okay, so
people could be totally anonymous and then start submitting code towards a Decred project and be funded. And
we have a few people who operate like that. And then the other path is that hey, let's say you don't want to show up and and build something without getting paid or impress upon someone that you're talented. You can come and make a proposal and propose that the stakeholders and the treasury pays you to do some work that you specify. So those are the two ways to really get engaged with the project.
Great. So without going into different layers of cryptography, could you explain us the privacy implementation that Decred ended up going with for this release?
Sure. So we call it stake shuffle. And the reason is that the people who are stakeholders are really what drive our privacy solution. Our privacy solution has, as to the best of my knowledge, the highest fraction of the coin's total circulation opting in to use the privacy. We currently have 29% of the Decred in circulation using privacy. And the vast majority of that is stakeholders using privacy to privately buy tickets. So what they do is that there's a protocol called Coin Shuffle++, and it's effectively a non-custodial, it's a coin join, so it's non-custodial, but it's also a private coin join so that even the server operator and the other peers can't determine whose outputs are whose. Mm-hmm. So for example, 10 of us can come together, we put in a whole bunch of coins into this Coin Shuffle++ mix, and then out pop a whole bunch of outputs, and we can't tell whose output is which. We all know we put one address in to get, to control one of the outputs, but none of us can tell who's, which one is which.
Is this like a coin join that's basically being done on your staking nodes? Is that the way to look at it? Or?
Yeah. So what we did here is that similar to how we operate with the DEX, rather than create both the non-custodial network and the peer-to-peer the server mesh at the same time, we just did the peer-to-peer part where there's the non-custodial part. We just did that. So there is a centralized server, but even the server can't tell where the funds are going. So that everyone shows up, everyone opts into a mix, and then the funds all pop out on the other side. And just like you point out, it is a coin join.
It's still somewhat centralized, the node that runs.
That's right. And so, both with it's interesting that both for this, both for privacy and for the DEX, both of these things are networks where we need to add a server mesh in the near to medium term.
Are you concerned that, say for example, this privacy becomes successful, that you start being deemed a privacy coin? And then, we've seen already that I think some Korean exchanges started delisting Zcash, Dash, although some people would argue if Dash is private or not, and Monero. Would that potentially be an issue for you guys, you think?
I believe it already has been. If I'm not mistaken, if I'm not mistaken, we have been delisted from Upbit recently, and they said that with the introduction of privacy features in 1.6 here, that we qualify as a privacy coin, and then correspondingly they've delisted us. That's as to the best of my knowledge. I really haven't been following the matter very closely, but my understanding is that when you're a privacy project, you run the risk of regulated entities delisting you. And this is also part of the motivation for us to create the DEX, which is that when you have a DEX, if the exchange is effectively an email server that anybody can turn on, it's kind of hard to get delisted from that. So that was our motivation to create the DEX, is actually what's been going on here with these privacy coins, or part of it.
Your opt-in privacy. So I think one of the criticisms of some of the privacy coins is that you could have an inflation bug. Because you guys don't do privacy at the base layer, it's kind of on opt-in layer and above. You don't have those kind of risks, let's say.
Yeah. So the kind of risk that you end up having with the inflation bugs is this: when the amounts are blinded, that is when you start to have risks of inflation bugs, because both Zcash and Monero, Zcash is very strong privacy. It has stronger, in ways it has stronger privacy than Decred, but in ways Decred has stronger privacy than Zcash because more people opt into using the privacy as opposed to with Zcash. And then with Monero has the same problem, which is that they obfuscate amounts. So if there's a bug in there, I mean, somebody could be effectively printing Monero all day. So this, we don't do that, and we don't have this risk because we don't obfuscate amounts. And this was actually one of our motivators for not obfuscating amounts, and in fact, we don't really have any plans to obfuscate amounts because it creates this risk where if there is any kind of inflation bug, you won't know that it's happening. It's just, somebody could print, 100 million Decred. And in our case, it's actually really risky because it could then break our governance model. So, okay, let's say somebody prints 100 million Monero. Okay, maybe that's bad for Monero. Who knows? Maybe it's good. But in our case, it would completely wreck our governance system. So we've been particularly cautious in that regard, and we don't have any plans to obfuscate the amounts, at least right now.
So you've basically decided to go with Lightning, which I guess is that the same, more or less the same stack Lightning implementation that Bitcoin have built? Or?
Yeah. So what we did is that. So in the past, we had built out BTC Suite, and that's the alternative full node implementation of Bitcoin and Go. And so we built that out, and then we ended up effectively we stopped work on it in 2016. That project, those tools ended up getting picked up and used as libraries by the Lightning Labs people, who work on the Lightning Network. And they, so DCR, there's LND, which is for Bitcoin, and we created an adaptation of that called DCR LND. And so we took the whole code base and ported it over to Decred. In fact, we actually added a useful feature, which is that we made it so that it supports SPV. So Decrediton can run in SPV mode. That is, you don't have to download the whole chain or sync it. You just download the headers and make sure they all fit together. And we actually have secure compact filters, which Bitcoin doesn't have, because there's a header commitment to these filters. That's a bit technical, but we have that. And then you can also use Lightning Network without syncing the whole chain. So it's a very convenient system for using Lightning. Now, given right now with Decred, there's not a whole lot of people using Lightning, but pretty much nobody's using it right now. But
transaction fees is not an issue at Decred at the moment, is it? So.
Well, that's right. But I think the thing that's important to remember about Lightning is that it isn't just about fees. It's also about use cases. There's a whole bunch of use cases that just you can't even begin to use on-chain payments for. So, for example, let's say I want to go to a restaurant and pay for food at a restaurant. I and the restaurant are not going to be okay waiting for 3 confirmations on the Bitcoin blockchain to pay for food. I mean, it's like I could be there another hour. Nobody's got time for that. So it's like these low latency payments. I mean, here's another one. I mean, if somebody wants to, currently with the DEX, we have to use a large lot size for 40 Decred. That's about $2,000. If we create an off-chain Lightning Network based system for doing exchange, people could be swapping $1, 50 cents, 10 cents, and it's totally feasible in the context of Lightning Network fees at that point. So there's a whole lot of things that Lightning Network enables. And I mean, for example, somebody could give me a Bitcoin invoice, and then I could pay the Bitcoin invoice using Decred Lightning Network, and then it swaps it to Bitcoins, and vice versa. So there's a whole lot of
that's slick. That's one way to kind of swipe them a bit.
Yeah, there's just a whole lot of things that that are unlocked once you start talking about off-chain payments. I mean, here's one, which is that all of this on-chain tracking of people's coins becomes a lot harder once you start going off-chain, because then it's like, okay, well, you used to have all the data because you had the copy of the blockchain. Now you have to go, you have to go follow the thing and listen to all the hops and see all the intermediate nodes and watch for all the hash time lock contract hops and be like, oh, okay, so I'm going to trace it back to this channel. And then it's like, well, who owns that channel? And so it's like, there's a whole lot, there's a whole lot of new dimensions that are unlocked by Lightning Network. As much as I know there's lots of people in the cryptocurrency space, maybe not lots, but some, who really don't like Lightning Network for one reason or another.
I mean, do you guys plan to look at other L2 solutions like, side chains, state chains? Was Lightning very much your layer 2 going forward?
Well, I think what it really comes down to for me is how robust and how mature these various options are. I mean, from a sidechain perspective, I've never been particularly fond of sidechains because as somebody who works on another full-on cryptocurrency, to some extent, every cryptocurrency is a side chain of another as long as you're using atomic swaps. So it sort of begs the question. It's like, well, what's the utility of a side chain for, at least for me and for Decred? And, there's lots of use cases where you don't want that. There's some where you definitely do. And if I recall correctly, you work on the Ocean protocol?
I worked on a fork of Elements, where we tried to do a KYC sidechain, correct? But we're more focused on other stuff at the moment.
Yeah, and I mean, I feel like sidechains definitely have a use case, but as somebody who does, who runs a full-on standalone blockchain project that doesn't depend on Bitcoin explicitly, it's just, sidechains. There's an incentive problem, right? If you're going to have a two-way peg, it's like, what's the upside? Mm-hmm. And I feel like that was always an issue with sidechains, is that there was an incentive problem, and that's why people say opted for ERC20 over sidechains, is because ERC20 is like, hey, I'm going to create my own new token. We're going to come to my casino, let's gamble, and then boom, I made a lot of money, you made a lot of money, or hey, we both lost a lot of money. That there's that incentive to to succeed and to win, whereas with sidechains it really isn't there. And I feel like there's a whole bunch of other L2 solutions out there, but as they become more mature, then we can start talking about, well, hey, let's bolt this onto Decred, or hey, let's not bolt this onto Decred. But from our perspective, it's just that Lightning Network is the most mature, and it's also, to some extent, there's very few useful smart contracts when it comes to Bitcoin's transaction script and implicitly Decred transaction script, because we inherited that. We didn't change it very much from Bitcoin. There's not that many useful smart contracts, atomic swaps, time locks for. Huh?
We've been looking at discrete log contracts. I don't know if you've looked at that on Lightning. That's quite interesting.
I haven't spent much time looking at DLCs yet, but yeah, the space of useful smart contracts is pretty small, and so we just saw it. It's like, it makes sense. The paper from Poon and Dryja is it's pretty straightforward to see what they're trying to do. They're trying to go, well, micropayments will be awesome. How do we do micropayments? Well, we have to make it so we only settle every so often. And then from there, it's just sort of, follow your nose until you solve the problem. And, I really was very impressed. I read the Lightning Network paper, before Lightning Labs started. And I thought that I was like, wow, this is great. And then sure enough, boom, Lightning Labs pops up, and Elizabeth and Lalu and the whole crew have really delivered in terms of the command line. We had to add, of course, our own graphical stuff, but I really think that they've done a great job delivering.
What's next for Decred? I mean, clearly this has been a lot of work, but how do you want to grow the ecosystem? How do you want to create, I'd say, more of a circular economy? Are you going to go out and start pitching this to institutions like what's happened in Bitcoin? What's the future?
I think that there's an allure to pitching to institutions. It's because you only need a few of them to sign on, and then it's like, oh wow, the price went way up, and everybody's really happy about that. But I feel like, really, if you ask the question, what are cryptocurrencies really all about? Cryptocurrencies are really a different kind of society, and I'll credit one of our pseudonymous contributors, Triple NKO56, for this one, which is that it's a different kind of society. You're opting into a society that has different rules, and correspondingly, I think that the revolution with cryptocurrency is really a ground up one. As much as there's the allure from a number go up perspective of having a top down revolution because the price goes up. I think that the real revolution is from the ground up, and correspondingly, that's why I think Lightning Network is so important here, is that Lightning Network enables all kinds of use cases and all kinds of people to get involved that might otherwise go, whoa, the price is too high, or oh, I want to micropay for something. And I think that that's where you're going to see a lot of growth in the context of Decred. We don't really solicit institutions. We're not we're not anti-institution, but you're unlikely to see us out pitching venture capitalists and institutions to be like, hey, come invest in Decred. Hey, if they want to show up, that's great. We don't offer anybody any special deals, but we're all stakeholders here. And from my perspective, I'm going to keep building for the ground up solution, for the future. And that's where I think you're really going to see Decred realize its potential.
Wise words. Look, it's been great having you on, Jake. Clearly 1.6 is a huge release, and I think anyone who's a fan of crypto should be paying attention to Decred. But thanks for your time. Everyone else, thanks for listening. Goodbye.
Thanks for having me on, Nick.